Hi, this is Mediha Khan of Toronto Condo Investments, and I'm happy to have a conversation today with Rakhee Dhingra of Mortgage Savvy. We will be talking about multiple mortgages and second property. So, Rakhee, thank you for being here today.
Medea, thank you for having me today.
Wonderful. So let's dig right into it, Rakhee. Is getting a second mortgage tricky for somebody? Let's say if it's an investment property or your second home, and are there differences between the two?
And I'd be pleased to address that question. Securing a mortgage for a secondary property, whether that serve as an investment or a second home, is very similar to the process of actually engaging in a mortgage for your primary residence. There are some varying sort of lender parameters that we just need to be aware of. For example, if it is your intention to purchase a home to occupy the property as a vacation home or a secondary property, you can actually purchase a property with the minimal down payment, which is 5% of the first 500,000 and 10% of anything above. To kind of run an example with you, let's assume a client is looking to maybe purchase a vacation property or a secondary, condo downtown Toronto as people transition back to work at a $750,000 price point. The down payment on that would be 5% of the first 500,000, which is 25,000, and then 10% of the additional amount up to 750, which is an additional 25,000 for a collective down payment of 50,000. So it's great to educate clients on what those opportunities might be, because I do think that clients may have a little bit of confusion there. If the property is to serve as an investment, which is a rental property, then the down payment does increase to 20%. But if you are looking to purchase a property with the intention of it serving as a secondary property, you do have the ability to proceed with a purchase with the minimal down payment. With respect to the overall mortgage qualification, however, it's still very much contingent on credit and income as well.
Okay, so you have to look at the whole picture, someone's
Correct.
whole financial picture to see if they qualify for that second property to begin with. And then there's the different down payments that you mentioned between your second rental property or your vacation home.
Correct. And some other variations as well are that when the property is being purchased with the intention of it serving as a secondary property, as a mortgage broker, we have the ability to shop the market to ensure that we're getting you the lowest possible rate. Where the property may be an investment and the intention is to rent that property, lenders do charge a minimal premium on the rate. So it is important to note that there is a differentiation on the mortgage rate that you may have access to, but you still have access to the similar products such as variable or fixed. Amortization is still 25 or 30 years. So there's still the same degree of flexibility in terms of the type of product, but there is a small premium on rate. Now, where that property is also potentially an investment, where there's the intention of renting the property, a lender will also allow you to use a portion of the anticipated rental income, which can help you stretch that qualification a little bit more and give you a little bit more room in that mortgage loan amount to be able to purchase a property that, kind of meets your investment goals.
Okay, great. So we have someone with an application would have to present to you that this is what the intended rent would be on this property, and then we can use that to build our case for the qualification, right?
Correct. And we really do handhold our clients when they're initially sort of even contemplating a secondary purchase,
Yeah.
whether it be for the intentions of, serving as a vacation or a secondary home or an investment. We do that legwork. We'll start to, assess at what comfort level are they at in terms of mortgage loan obligation and monthly payments. We want to ensure that clients have an awareness, based on market rents, and we're happy to do some of that research for them as well, whether there'll be a surplus, maybe there'll be extra funds that we'll be able to set aside because we are seeing very healthy market rents in the market today, or if there's a shortfall, right? And then we take that assessment into consideration as well. We try to prepare our clients financially by giving them an eyes wide open approach on the investment strategy to ensure that they're comfortable and that they also understand some of those long-term sort of goals and strategies, because that investment purchase or that secondary home purchase is part of an overall wealth building strategy that we help clients build out.
So are the rules different, Rakhee, if this property, let's say vacation home, is outside of the province?
So again, the only province that has a varying degree of differentiation in terms of lending guidelines is really Quebec. But generally speaking, we can execute mortgages across all other provinces under the similar sort of parameters. Where the challenge may be is securing, clarity on rental income. I think it's important to understand that that's a very sort of different market, and we do want to ensure that we're, capturing accurate information to support the client to the best of our ability. But we do have the ability to secure mortgages outside of Ontario under the similar parameters as securing a mortgage in Ontario.
So for vacation homes, we're not using it all year round. We go there seasonally. When securing a mortgage for a vacation home, do you look at rental income as well for the period of time we don't intend to use the home, or can it sit vacant and that's okay? That doesn't count into the application.
So with respect to the lender's guidelines, if the property is being presented as a vacation home for your own purpose, you do need to occupy the property for at least 6 months of the year.
Okay.
The lender will also not utilize any component of rental income. Unfortunately, in order to capture any rental income, the lender is going to look at consistency over the period of the term of the mortgage and over the year. So unfortunately, rental income is not applicable in that qualification. And in order to qualify, you do need to ensure that you're occupying the property for at least 6 months of the year.
And from your experience working with different lenders, are there certain lenders that are pro vacation properties and others not so much?
I think that most lenders, at least the big fives and credit unions, will have a similar appetite for properties that are going to serve as secondary, vacation homes. I think that is seen very similarly in terms of underwriting guidelines of lenders to a primary residence or property. Where we start to see a differentiation in terms of appetite from one lender to the other is when we're looking at investment properties that are going to serve as, rentals. That has somewhat of a higher threshold of risk for lenders. So lenders may use some lenders that are looking to kind of secure that type of business are going to, potentially use a higher amount of the rental income in the qualification, where others may take more of a conservative approach. So each lender is going to differ slightly. Some lenders will also ask for an added down payment, meaning they may ask for 25% versus 20%. And as mortgage brokers, we do have access to over 40 lenders, which gives us the ability to ensure that we're really, fitting the mortgage product to our clients' needs. And there's always alternative lenders that will allow you to also secure mortgages under, a little bit more flexible terms, giving us a little bit more room in the qualification where needed as well.
Great. Now, we work with a lot of investors, and this comes up all the time. I have the down payment and I can put it towards a pre-construction condo and I can divide all my money about 2 or 3. It's not going to be ready for another 4 or 5 years. How many properties can I actually qualify to get a mortgage when I'm looking to close on these?
That's an excellent question. And that's a question that we hear a lot of.
Yeah.
And I'm going to actually answer it in 2 parts. One, generally speaking, when it comes to like the big 5 banks, they do, cap at about 5 properties. Once we, kind of reach that 5 property mark, they're a little bit hesitant to extend further mortgages. However, that is contingent on the client's overall profile. What is their asset fallback position? Meaning, what assets do they currently have in place? What is their income reflecting? So those are very contingent on the client's specific set of circumstances, and that will impact a lender's response. So do we secure exceptions? Absolutely. But as a general rule, lenders will extend up to 5 mortgages, whether that be one bank or across, various institutions. It is also important to note, however, that we have access to alternative lenders that are a little bit more flexible. So I often say that there is a solution for every client. And when we're looking at pre-construction specifically, we're now starting to ensure that we're engaging in purchases that are going to have future closing dates. That allows us to ensure that we're working backwards. We're working with the client to set expectations on where we need income to reflect in the future to be able to sufficiently secure those mortgages into the future and be able to close on these properties. So we do that work with the client right at the onset to ensure that we're setting specific expectations in terms of where income does need to reflect.
So let's say I have the cash for all to make these down payments for these condos, but I don't qualify today based on my income today. But I'm doing really well in my career. I have great hopes that I'll be at an elevated role with a higher income. Can I, and builders require those pre-approvals at the time of purchase. Can I qualify based on my future income prospect?
So unfortunately, when it comes to securing a pre-approval to meet the builder's requirements, builders are becoming a little bit more specific. They want to ensure that they have a pre-approval that actually stipulates a future closing date. And this is often referred to as a capped rate approval. So that does require due diligence, and that is based on where your income is reflecting today. We're unable to work with projected income. However, at the time you're actually looking to secure the mortgage, there is some degree of flexibility there where we do have the ability to start working with you. I had an example this morning. I had a client that is self-employed and just filed their 2021 taxes. Now, to minimize their tax exposure, although the business did very well, they did, maximize on their taxable write-offs. So they minimized their income declaration, right? Because it does come down to net income, not gross. And I'm self-employed, and Emily, I know you're self-employed as well, so we can relate to that concept. Now, for the purposes of securing a pre-construction today, I'm working with that client today to ensure that we can meet the projected income requirements into the future. For the purposes of securing pre-approval, my client has approached the builder and has a net worth statement that is going to be able to serve as sort of that exception to the pre-approval requirement. And I'm going to work closely with the client now to ensure that we're kind of setting some meeting dates in advance to ensure we're prepared when the builder does provide notice of final closing.
So it's interesting you bring up self-employed, because that was one of my questions as well. How easy or tricky is it for a self-employed person to secure a mortgage and then to secure a second mortgage for that vacation home or that investment property?
So self-employed individuals have a degree of flexibility. We have the ability to be strategic in how much income we are actually showing and ensure that we're aligning our declaration of income in line with sort of our real estate purchase goals. So opportunities exist. There are quite a few sort of business for self-stated programs as well that we can educate our clients on. So there are opportunities. It does come down to, however, where your net income is sitting when we're looking to qualify with one of the big banks. So it is important that it does come down to net income. But lenders take other, aspects into consideration. If you're self-employed and you're paying yourself into a corporation, a lender will look at your retained earnings and allow you to potentially gross up your income. So I often say a really good broker is able to break the box on standard lending guidelines and build a business case. So there is opportunity for self-employed individuals to qualify for a mortgage no differently than a salaried individual. There are also alternative lenders that provide really strong solutions for self-employed individuals where we can actually capture income, for example, based on, bank deposits and income coming into a corporate or a business account. So there's quite a few options available to self-employed individuals to qualify for mortgages, both for their primary residence as well as investment purchases.
Oh, that's great news. So I think doing your homework and connecting with the right broker who can break it all down for you and make, like you said, build a business case is probably the first step for a self-employed person.
Correct.
Yeah.
Absolutely.
Wonderful. Now, in conclusion, Rakhee, if I'm thinking of getting a rental property or I'm thinking of getting a vacation home, how should I best prepare myself? And from your perspective, what are things I need to look into, documents I need to gather? What steps should I be taking right now?
So if you're contemplating a purchase, I do think it's important that we take a step back to look at what we have available in terms of liquid, assets to leverage towards a purchase. I think that's a great place to start. It's also important to just be, aware of where your credit score is sitting and maybe taking some necessary steps to kind of have that inch upwards. We often will say to a client, we want to aim for a score of at least 680 or above. What that does, it places you in a position to secure the lowest market rate, which is going to be very beneficial when we look at monthly carrying costs. But it also allows us to ensure that we're able to maximize on your loan exposure with any lender. So I think that preliminary sort of phase of when you're contemplating a purchase is to really kind of look to see that you have your ducks in a row, that you understand what you have available to you for the down payment, to have a conversation with a broker on alternative sources of maybe increasing that down payment if you're looking at potentially taking on an investment purchase, and understanding where your income is reflecting. So if you're a self-employed individual, you're probably beginning to plan for finalizing your income tax returns for 2021. So this would be an excellent time to connect with either a mortgage advisor or a broker to have a conversation on where your income does need to reflect to be able to meet your purchase goals. And if you're salaried, it's great to be able to look at, your T4s and present that to a broker or a mortgage broker so that they can provide you with insight in terms of what's achievable. As a secondary step, we're encouraging our clients to then have that preliminary conversation with us, but then take that to their trusted realtor to match it with what the market will yield today. So what we have seen with COVID is that we've seen the real estate market continue to appreciate at a very sort of, high rate of return, which is, I think, opened up opportunity for a lot of individuals. I think there's confidence that the real estate market is going to continue to be a secure investment for individuals. And I think taking that, assessment of where their qualification will, sit and matching that to market in terms of where market rents are reflecting and what is potentially possible is sort of that secondary step of the process and an important component of preparing to take on that secondary purchase.
Great. And one more question, Rakhee. You mentioned looking at alternate sources to increase your income. What are those?
So in terms of looking at if you're self-employed, for example, and there are components that you might be utilizing in terms of write-offs, as a mortgage broker, we have the ability to do some add backs. So if you're writing off, for example, a car expense, we can add that back in. A home office expense, we can add that back in. So there are options, there are programs out there where we can work with you to ensure that you're still able to meet your goals of minimizing your tax exposure, but still being able to qualify for that larger mortgage amount. So there are strategies. The other sort of strategy here is to really focus your attention on taking on an investment in an area or a neighborhood that's yielding a higher market rent, because then we're able to utilize that to ensure that we're giving you that little bit of added mortgage exposure that's going to pay off in the long run.
That's incredible. Not many people know of these different strategies. I think, the understanding that a mortgage broker can actually sit down and work with you on your financial situation and bring up different creative, inventive strategies that you don't really hear of.
And I do think that there are opportunities and solutions for every client's needs. And so I think that's important to understand that regardless of what your set of circumstances are, take the time. If there is sort of curiosity, we're here to educate. We're here to provide you with the information that you need to prepare for that anticipated purchase. And we're more than happy to coach along the way to ensure that you're able to kind of get, align sort of the requirements to be able to initiate that purchase when you're ready to do so.
I love that you said that there's strategies for every person. We don't have to sit down and self-disqualify ourselves. It's just having that conversation and exploring the different strategies that are available that, speak to a professional who knows what.
Correct.
Amazing. Well, thank you, Rakhee. This was super informative. And if anyone wants to reach you, Rakhee, where can they find you?
So they can actually find me at www.msavvy.ca. If we can include that information, that would be fabulous.
Sure.
I'm also more than happy to receive a text or an email at Rakhee@msavvy.ca. And feel free to reach out directly via text or cell. I'm happy to share that as well at 416-720-7295.
Excellent. Thanks so much for your time, Rakhee.
Thank you for having me.